I think the world is quite different from that standpoint. Of course, 99, and I think most people understand that today, that most of the companies that rode the dot-com boom never generated earnings. In fact, they never generated revenues. Many of them, it was all eyeballs that I remember being the moment. There are three companies that rode the boom up, rode it back down, and recovered and became larger, substantially larger companies. One was Microsoft, one was Apple, and the third was Amazon. Most other companies, from pets.com on, you don't even remember anymore. Those three made it. Amazon is a special case. Microsoft and Apple, they had the operating system, and they made all the difference in the world because they could create the software that made the internet usable. And that was the distinction. Nobody else was able to do that. Even Oracle and Cisco, that are still here, but they're microcosms of their former self. So where are we today? Well, we have these hyperscalers. And the thing about the hyperscalers is everybody can see the vulnerability, too much data spending, too much data center spending. But in a sense, they resemble the operating system of the dot-com boom. They are the hyperscalers, and they can create the software packages that bring AI to the people. Apple's part of that because they have the phone with which most individuals will access AI. So that's the question: who's going to create the software and generate the revenues? And I think hyperscalers plus Apple have the best chance of being in that situation.
Do you think this AI theme, which has been such a big theme for this, not just the tech space, Chuck, but also just the market in general? Yeah. Are you concerned that there's a bubble kind of emanating around it because the spending dollars we see are just so huge from a lot of these companies?
Right. Well, the spending dollars are based on building data centers. I would say the risk is some of the independent ones, some of the larger ones will be fine because they're basically attached to the hyperscalers themselves. Some of the independent ones could be vulnerable because those chips, they depreciate very quickly. And I mean, even NVIDIA, there's a new chip every 18 months, and it's 10 times as powerful as the earlier one. So that would be the one thing I would look for. But again, the hyperscalers themselves are in a totally different level. Even after spending that money, they generate cash, free cash, and that makes the big difference. So who's going to actually create the software package that they can monetize? And I would say the hyperscalers have the best chance of doing that.
Chuck Clough with us. Good morning, 92.9 FM in Boston. Of course, definitive with Merrill Lynch years ago and still very active. Is ETFs, Paul, doing, to be polite, better than good?
Yeah.
Would be the statistical analysis, of course, of force. His goal for 2026 is to fix Boston College football.
Oh, boy.
That's at the top of the pile.
I always off myself in the fourth quarter, and they never use me, but we're working on it.
Talk to us about the ETF business. How do you guys view that? Because it's been such a change from how Tom and I and you came up into business where mutual funds.
Oh, sure.
The Boston mutual funds were the center of the world. Now it's ETFs. How do you guys view ETFs? I know you're in the ETF business.
Well, Vince LaRusso, who's my partner, and he actually oversees the ETFs. He caught this trend early and actually started designing these ETFs back in 2019, 2020. The simple way of looking at them is they're amazingly tax efficient, and that makes all the difference in the world. They're much cheaper to run, and putting in the context, this is a world in which commissions are coming down and management fees are coming down. There was an article in the journal, I think it was in the journal yesterday, that pointed out there are suits building up in the 401k space. So this industry is going to change really dramatically, and ETFs could be the solution.
The value of to pick 60 State Street in Boston of Pioneer Group and Mr. Correa and what Dave Triple did there in all, it's been the growthiness vector. I saw a ratio the other day. It's incredible the run of growth we had. Does value do well only when there's a bear market? Do you need a bad market for value to do better than growth?
I would say no. I think there's a tendency to move towards things that people think are value. I would say the most important engine of a value company is that it generates free cash flow and can start to collapse the capitalization. The most important thing, if it's a mature industry you'll be generating cash flow because you're not investing.
Right.
If you're generating cash flow and can move the capitalization to a point that it's still efficient, that will make you money in a value stock.
Are you worried about the accounting for all this CapEx investment in AI? If we have some form of write-down or depreciation of it in a normal sense, do you believe the math now, like Paul and I believe the math in February of 2000?
Well, again, I think the point about my hyperscaler is they generate huge amounts of cash flow. The dot-com companies didn't, with one exception, two exceptions. That was Apple and Microsoft. So I don't see that as any kind of a systemic issue. You have the entire cash flow company. You have the entire corporate sector generating cash flow. Let me give you one example of that. If you look at private debt relative to GDP, business and corporate debt, the private economy, for the first time in the post-war period, is net saving money. Every year that goes by, the level of private debt to GDP is down 2%. It reached its point right around the time of the COVID, but private debt as a relationship to GDP is declining, and that's more than making up for the increase in debt on the part of the government sector, and the dollar is your best example of that. The dollar is supposed to be in a state of collapse right now, and it isn't. It's trading at the top third of where it's been over the last 30 years, and right in the middle of where it's been over the last 10 years. So I think that's the best symbol that we don't have a problem that everybody's anticipating here.